Good morning, everyone. Welcome to the On Time, On Target morning brief. Today is, what is today? It's September 9th, Wednesday. Seems like a long week already, especially after we got our week started off with a big punch to the face yesterday in the market. Kind of the third day of that. I saw that the 10% move down in technology is the fastest 3-day 10% move down. The previous fastest was back in March of this year, so we continue to set records out there. Yeah, I think we'll bounce today. That was kind of a big move down. I think it's largely a reversion to the mean type move, and that's why you see things in the green this morning. But we'll see. I still think there's plenty of concerns about where the future of the market's going up until the election. You know that I've been a broken record on that. But we'll talk about that this morning. All right, make sure you have everything set up correctly with your chat windows open, with all attendees, and your Q&A windows open as well. If you're joining us on replay, thanks for checking us out. If you want a free trial to come in here and see it real time, contact me at steve@ototnow.com. And we are a group of investors to get together in the morning, bounce ideas off each other. It's mostly long-term, but we do talk about some short-term day trading stuff for a few minutes, and then we switch back long-term. But either way, I answer any question that you ask in the morning. The rest of it's a fighter pilot debrief, so let's get started. Our mission objectives this morning: we're going to grow our money, protect our money, and live off our money. For tactical objectives today, we're talking specifically about protecting our money. And how we do that is real estate investment trusts. So when you think about different ways of investing, a lot of people think generically you have your cash in the bank, you have a stock market, and you have real estate. Some people out there, it's very expensive and a very inefficient way of doing it, think you have your cash in the bank, real estate, stock market, and insurance. Well, you can invest in insurance. You just basically, over the course of your life, you give all your money to the insurance company, and they peel it off back to you over time. Not a big fan. It's very expensive. Don't do that. But if you did that, and you're stuck in it, whatever, just go with that. But as far as real estate, not everybody wants to go out and buy a single-family home. For the millennials out there, or Gen X or Gen Z, or whatever you would like to call yourself, a lot of the life goals that those folks have do not involve owning a car, do not involve owning a house. Even Elon Musk, who is, again, seems like he's on the front page of CNBC every single day. Even Elon Musk has said he is getting rid of all of his possessions and being a completely not tied down, cash flow it every day, sort of person. So that is kind of interesting. Yes, and own Apple products. Good morning, Predator. Welcome. All right. So real estate investment trusts are a very good way to protect your money. Specifically, we're going to talk about how you do that within the stock market. So if you do not want to go out and own real estate specifically because of the high transaction costs, turnover, you're not diversified. People try to give me you invest in individual stocks and you don't understand diversification and you can't think that 20 individual stocks is diversified enough. I'm like, well, how many houses do you own, buddy? How many jobs do you have, right? So let's save me the lecture on diversification if you have one job and one house, all right? So you're a lot more diversified in the stock market, even with a handful of stocks. So this is a way to now take real estate, which again is you don't see the same growth through real estate that you see in the stock market over time, but certainly it's a way to buffer the downside. It's also a way to hedge against inflation, which you're going to hear a lot more about going into 2021, which unbelievably is like 4 months away to get rid of this year and hopefully start a fresh new one. So the question of the day, following on from that, is a lot of your real estate investment trusts pay off dividends. Some of them pay monthly, which is nice if you're in the stage of your life where you're living off dividends. Or if you like to reinvest in dollar cost average, it's nice having some cheese off the top coming back in and reinvesting in, because when the market's up, you buy less shares when they're expensive, and when the market's down, you buy more shares when they're less expensive. So it's kind of a really good thing for your engine I talk financial engines for it to run nice and clean. So, but I'm going to talk specifically about different scenarios on when you should reinvest dividends and when you should not reinvest dividends. And then you can analyze that with your own where you are in life and go from there. All right, as far as our flow today, we are going to go long, short, open, short, long, which means we're going to take a look at the market review. We're going to go around the world and check out headlines and look at things like gas, oil, and bonds and precious metals out there. We'll come back to the U.S. We'll talk about the headlines reviews from this morning, and then we'll talk about our long-term investments out there. Here are the 6 real estate investment trusts we're going to specifically talk about today. Then within 10 minutes of the open, we're going to go into day trading mode. We're going to look at the opportunities out there, most of which are long today. Have literally, I filled my page up with long information. If we can see that, probably not enough contrast there. And I don't have anything short written down. We'll try to find something short, but probably looking at 2 longs and a short for our big board today. All right, we will execute that open. We'll get through the day trading stuff. We were down a trade yesterday, so I kind of want to get a nice 3R trade and put it in the books to get up for the week. And then we'll transition to your Q&A and questions of the day. So contingencies, if you have any issues out there, contact me at steve@ototnow.com, and my staff will help you get on board. And also, disclaimer, standard applies. This is an educational presentation, so you have to do your own due diligence before you take action in your own portfolio. All right, let's go ahead and share out our TD Ameritrade Think Pipes. Can't talk this morning. Think Pipes platform, and we're going to take a look at the blue chart here, which is a 1-year S&P 500 chart, which is, again, big run up in February. We had the historic sell-off. We had a V-shaped recovery, and people are already starting to say this is the W. Okay, I guess it's like looking at clouds. You can see what you want. But no, it's not. But it is a pretty hefty sell-off in the past 3 days. So we'll see where we go from here. As I said, the past several days, 300 is kind of a level that I honestly, as long as we're above 300, I really don't care. All this is just kind of things settling in, a little bit of reversion to the mean. And the dynamics of the market right now are a little different in the fact that you have about 10 stocks driving the whole darn thing. So when you're looking at up, down, all that, it's 10 stocks. So it's really they're so big that they're actually skewing the market, if you will. So not super concerned. But if you do look at some other indicators, which I don't talk about these a lot, but if you look at the technicals, the RSI, relative strength indicator, is all the way down here at 43. Well, below 50 is, kind of a think about buying. Above 50 is think about selling. So when you really look back in time, where have we hit, the 40s level? Well, back in here, this is back in last October. So then pretty hefty run up from there. Obviously, we were in that whole area here in March. We'd had a pretty hefty run up. Let's see, we touched it again here, which sparked off a big run up. And then we're here. So one could say technically that we are set up for a nice big run in the market again. I don't think so going into the election, but certainly from a technical perspective, that is where we are. When you look at the MACD, again, we're still well above we're in an overbought or overpriced, if you will, kind of market scenario. But this is an interesting indicator. Also, Kramer got on, and a lot of people listen to Kramer, got online during a show last night and talked about traditionally after a 3-day sell-off like this, that's a buy indication, basically chips in the middle, and off we go higher. Yeah, I would say normally that's the case, but the specter of the election out there, to me, it makes me a little more cautious. So I'm looking to protect money right now instead of aggressively earn money. So not really seeking alpha, I'm seeking prevent losses at this point. So an interesting look there, if you will. I will show you the Qs real quick. Again, this is the NASDAQ. Again, even more pronounced as far as the move down. But again, the move up was more pronounced. So that all kind of makes sense. I'm not sweating this. I have not put out a video yet to everybody to kind of explain all this because I do consider it normal, if you will. All right, let's zoom in at the 5-day. Again, S&P 5-day is what you're looking at here. This was Friday with that big move down initially, and then some optimism going into and then sell off into the close. Yesterday, it's like, yeah, the market tried to stay in here, and then we started selling off towards the afternoon. So we're bouncing up here in the morning. Got some good housing numbers in. It was more a mortgage number that came in on today. But again, we've got some optimism going higher. But really, when you look at it, I mean, this isn't that big of a move. But yeah, it's getting everybody excited. But historically, not that big. All right, calendar today. We had two big earnings out last night. We had Lululemon and we had WORK, which is Slack. Both of them missed. Slack ended up down like almost 20% for a while. Now it's down only like 15%. Lululemon was kind of priced to perfection anyway. So it sold off about 5%. Not worried about those long term, but certainly resetting expectations. And then this morning, see in my notes, we had American Eagle beat earnings. We'll get on the right date. That would help. And there we are. See if we can find AEO. They beat earnings this morning. So they are up about 5%. So that's the name we'll take a look at for going long on our day trading stuff. All right, let's leave this behind. We'll set up our chart there for day trading. We'll come back to that and share out to you, cnbc.com. And I will walk you through a couple other names showing up. Good morning, everyone. Walk you through CNBC this morning. All right, let's refresh this. All right, here's our futures. So up almost 1% across the board, and then NASDAQ, again, it's tech heavy. Both Tesla and Apple are up this morning. Tesla obviously is overpriced. Apple was overpriced. I think it's getting back down to fair price. They're certainly not on sale by any means. So if you're wanting me to buy here, I'm just not. We have plenty of that. All right, as far as let's check Europe, basically up 1% across the board. A little different story in Asia last night, down mostly 1% across the board or more, and again, mostly tech there. Also, there was a headline yesterday about Trump and China, some more harsh rhetoric out there, and that's what you can expect. Again, the biggest threat to the market if Trump gets reelected. The good news is most of the tax reform that we had out of the 2017 Tax Cut and Jobs Act will probably stay in place and possibly get extended, if not made permanent. That'd be nice. But also the harsh rhetoric to China and really putting the screws to them. So probably need to do that. But unfortunately, in the short term, when you do take aggressive action like that, it is going to cause some volatility. Here's our numbers from yesterday. Again, pretty big numbers in the red, but we've run up so much, I'm not all that concerned. Volatility actually down on the day, which was a little bit weird. I had called that it would be above 30. It was, but then it fell down towards the end of the day. So we'll see. I still think long volatility is a good trade. If you have VXX in your portfolio, that is why. We can't hold that forever, so if it doesn't start going up, I'll get out of it. But that's why it's in there. All right, as far as bonds, not a lot of movement. Oil, oil's down, been getting hit. Basically, financials and oil have been hit hard in this sell-off. In addition to tech, everybody's talking about tech, but oil obviously has dropped from 42 all the way down to around 36 and then up to above 37 now. So that's a good sign. Interestingly enough, gold and silver with the big 10% sell-off in tech have hardly moved up. They really just haven't. They've been kind of a yawn, nothing burger, if you will. All right, back to our headlines of the day. Refresh here. There's Elon Musk. We talked about how hard Tesla's been selling off. They are bouncing up 7% this morning. So we'll see. I've been getting some questions about is now the time to buy Tesla? And I'm like, let's wait till it gets below 100. It's at 330 right now. So that tells you what I really think of it. Obviously, the technology is amazing, not arguing that. I think I love the cars, not arguing that. It's just on pure valuation. You're just insane if you're in Tesla. But yet, I have a client that insists that I have to buy him some today. So I will close my eyes, hit buy, and buy Tesla here. Good for him. Hope he's right. I don't think he is, but that's okay. All right, let's take a look. Slack down 16%. We talked about that. Absolute raging mania. That's kind of a funny comment. 2 months of Black Friday deals. I haven't heard this. When I talk about Home Depot and Lowe's, and I talk about better leadership from Home Depot, it's this kind of stuff that Home Depot has for 2 decades beat the pants off of Lowe's because of stuff like this. They're just smart about how they do business. So impressed. I don't know about this 2 months of Black Friday deals, but I certainly, as a consumer who goes to Home Depot at least once a week, I can't even stay out of there for whatever reason. And I'm not even that, handy of a person, and I'm there all the time. So it's pretty good sign. And that's one of my favorite stocks out there. All right, DraftKings in the news. That's been on fire. Let's see what else we have. I hadn't seen this. Tiffany and LVMH, that deal fell through. They were supposed to merge. So on the short side, I can only imagine that TIF is going to be selling off hard. So we'll take a look at that in a minute. There was the mortgage demand from home buyers sees 40% from a year ago. So it has really been on fire. Your standard refi is taking more than 30 days, depending on what area of the country you're in. Here in Austin, you're looking at maybe even over 2 months to get it done. So those folks are printing money out there. And that's good. That's all healthy. It's getting people into their houses, reducing their house payment, and again, more cash flow to spur the economy. I do think this is what we're going to talk about today, out of favor assets, opportunity to make big money. That is true. I think the real estate investment trusts are out of favor, and that's why we are going to talk about them. So let's switch to right now over to FinViz. And this is what you're doing. What you're looking at is Realty Income. It is ticker symbol O. It pays a monthly dividend. It is called the Monthly Dividend Company. And what you see is that is a real estate investment trust. The real estate investment trust, they don't really pay a true dividend. It's a flow through. They own a bunch of real estate. They lease it out to a bunch of different people. So diversification through a bunch of different contracts. Of that money that comes in, there's a number out there. I think it's 90%. Don't quote me on that. Has to flow through to the owners of the stock. So that's the way it's set up, and it's tax advantaged as long as it does that. If you ever look at your 1099-Bs, which good on you if you do, but when you look in there, it will say section 199 alpha tax advantage, blah, blah. That's what this is talking about. That's as far as I'm going to go into that topic. But even the distributions that you're paid out, they're not capital gains per se, but they are tax advantaged. So when you look at it down here in the lower left, you can see 4.38%. It pays out monthly, which a lot of people like from a cash flow perspective. Otherwise, if you're just reinvesting it, again, you get a monthly dollar cost average instead of a quarterly dollar cost average. You could argue it's still overvalued, but historically it is not, because people pay a premium to be in this. This is one of those holdings that people that are 50 and up have a lot of. And people 50 and up don't sell a lot. They tend to already be financially independent. They tend to hold this no matter what the market does and just collect the dividends. So that's the kind of stability in the stock that you would rather have than Team Robinhood, that may all of a sudden sour on the stock and everybody bails and it drops like a rock. That would be the difference between the tech bubble that people are talking about versus a name like this. Two things that stand to benefit the real estate investment trust are move to safety is one, and then secondly is the potential vaccine. So potential vaccine in 2020 looks kind of like it's going to happen. We don't know, but if it does, again, these stand to benefit. So let's look over on the big screen for Schwab, and I will show you some other real estate investment trusts. Some of these names you recognize, some of those you won't. O is in the upper left. There's the monthly dividend and still paying it. So didn't flinch through a move from 80 to below 40. We'll just pay our dividend out. No problemo. And they've got the cash on their balance sheet to be able to ride something out like that. Entertainment Properties was hit a lot harder, up from 80 down to almost, 13 there. Had to stop paying their dividend and have not started to back up. Entertainment Properties are malls, are movie theaters, are Topgolf is in here. As far as just the real estate portion of it, not the ops, but the real estate. So it has started to recover, but it's nowhere near where it was. So when you look at a vaccine-based stock, what's bound to benefit expect to see EPR showing back up in your portfolio. All right, DOC is another one. It's healthcare. It's run by doctors. It's for independent, my family doctor runs out of a strip mall. That's what he's in part of this. They own a bunch of property and loan it out to doctors, and it's run by doctors, so they kind of get it. I like that. That has given this name some strength over the others. When you look at all of the ones that have recovered, it's basically DOC, the healthcare one, as well as STAG, which is now an industrial. So you think commercial type industrial warehouses, things like that. Strip malls are dying, which is SKT, which is Tanger Outlets. So they were already in a decline. COVID doesn't help, and selling off. You can't buy this here. It's way too soon. Who knows what's going to happen to a traditional mall, but they are being, Amazon's moving in, that sort of thing. But when you think of Amazon moving in for a distribution center, why would they take a 400 square foot mall space when they could have a 9,000 square foot warehouse, which is what Stag Industrial does? So that's why this is recovered. It's actually maybe even up a little bit, and they've been able to pay their monthly dividend through the whole time. Maine is a business development company. So you now think more high risk loans. That's 7 to 9% type of loans to small to mid-sized companies. They have not recovered as much just because of the risk. So not real thrilled to put money here. Would have no problem putting money into EPO right now, EPR soon, DOC right now, SKT never, STAG right now, Maine someday, not today. So that's kind of where we are with the long-term protecting our money for the day. All right, as far as our short-term names, what we're going to take a look at is have several longs to look through here. Some of them are pharma related, so bear with me while I take a look at these. Some of them will not have volume. NanoX Imaging is up on it's a pharma play. So that meets the criteria. It is up 12% or so, 40 up to 47. That's actually more than 12 now. So moving pretty high here. We'll zoom out to get a little better look. All right, let's take a look at ASTC. Penny stock, oh goodness, down in 180, 171 up to 2. So it's back up to 206 right now. So sitting in here, that has a headline associated with it. Something with TSA, Astrotech, I don't know. I'm probably going to stay out of this myself. But if you do take it, you do get that 5-cent stop where you can load up on taking it long there. Not all that interested myself. KOS is up on merger. Cosmos Energy down in the pennies, not really going to deal with that either this morning. All right, VXRT, another pharma name. See what we have here. It does have the volume, 482 to 5. 5's always a good number. It's been dipping down, has protection from the downside because there's resistance, so I like that. It's up to here. Let's see, pharma. Can't tease it out right there, but I do like the way VXRT is set up. It's currently up 8%. Does that check with the math? 18 cents. That does. And it has the volume, so I like that long. We'll keep that on our list. CEMI. ChemBio, 380 to 398. Again, pharma move. It has volume as well. Lots of volume in the market. I'm not going to touch it without the headline, though. iBio, 190 to 218. Too low for me. Let's get away from that. Tesla's up 7%. We'll show you the chart. I'm not touching it as far as the long, but you could. You could talk yourself into this. 330 up to 356. Yeah, Team Robinhood, you think it's oversold probably and maybe move back in? Not me. I'll take this trend and stick with that. So not touching Tesla today personally. BNTX, I've written down as my #1 long here for today. Pfizer and BNTX, BioNTech are the ones that got the huge contract for the COVID-19 vaccines. I want to say it was 100 million. So they have been beat up down to 59 or so, and they're back up to 63.60 this morning. They obviously have room higher. If you went here, We'd have to talk about the stop depending on how it sets up. So it's pretty volatile, so it might be tough, but I think that's my number one long so far. Workhorse WKHS has been on fire. We're awaiting that postal contract. It got drug up yesterday by the Nikola General Motors merger, pulled it up. I'm long this name and like it. 2279. I'm not sure it has room to run without a major headline, which is going to be that U.S. Postal Service contract. So not taking Workhorse long today. All right. So VXRT, got it. AIM, I don't know what they do. Down in the pennies, too low. Not going to look at that. Novavax is in the news. Again, this is the name that we have shorted traditionally. So when you look at the trend, it's to the short side, 85 up to 89. So it must be some good news out there. That is 6%. Don't see a specific invax, but certainly set up there and not a little bit low on the volume, so we'd have to wait on that. Inovio is another pharmaceutical name. You know, I like this one, had a big trade in early this year. It has been nothing but selling off, so it is primed to move higher, but not going to take that today. And then American Eagle is the last one we will look at for the long side. And it is selling off. So never mind, it was up 5% earlier and it's selling off, so we aren't going to look at that. Let's look for short. Let's look at Tiffany. Again, the busted merger with LVMH, 121 down to 109. Let's see if that's showing up over here. That's a 10% drop with room to fall. So that's going to be my number one short. Ooh, man. The only issue is it doesn't really have the big move down here. Let's look at the other half of that, LVMH, and see if it was affected. Can't spell. LV, Louis Vuitton, Moet Hennessy, right? Not popping up, so we don't have that to look at as well. There's our Lulu selling off, and looks like Tiffany is going to be the number one short there. Well, you have Slack. We could put work up here as well. 2 minutes to the open, so we get our chart set up here in a minute. Slack 29 down to 24. Man, that's a huge move down. It's a strong company. I'm not going to short it, but we can keep an eye on it. All right. Top 10 in volume. NEO on the move up. Add that to the long list. Tiffany down and work down. So that's kind of the theme. So Tiffany will be the short. Zoom bouncing off of yesterday, higher. So just direct these from my notes. Looked at the decliners and don't have time for those. All right, we're going to set up our, if you have what you're taking, go ahead and put it in the window there. Otherwise, I'm going to set up the think pipes and we'll get set up for what I'm going to call for the trade. So we have SPY all the way onto the left. We're going to set up those long short. BNTX will be our long. That'll be primary. We'll talk about the stop here in a minute. Our second one will be VXRT. These are both pharma plays long. And then our short is going to be TIFF. We'll see if it's got, it has plenty of room to fall based off of where it was earlier this morning. All right, so 30 seconds to go. Welcome to the play of the day. We have 4 charts shown to you up here on Think Pipes from TD Ameritrade. On the left, we have SPY, which is the S&P 500, shows you the overall market. We keep an eye on that. On the left, the next 3 panels, we'll talk left, middle, and right. We have BNTX, BioNTech. That is a long that we're looking at based off of some pharma news. VXRT in the middle. That is also a long based on pharma news. And then Tiffany up to the right is our short. We're looking long here. Look for probably $1 stop, but I'm focusing first on the short side. So we have all the way down to 100 or so. So we'll watch this open. Plenty of volume in TIFF. Again, failed merger, so I'm going to take it earlier than later. I'm going to take it at 109 if it hits that. Ideally, I would want it to back up to around 111 or so. Did it just hit it? Nope, it didn't. I would want it to back up a little bit so I could take it around 110 or so. But I'm looking at a $2, let's see, $2 stop in Tiffany, which is going to be plenty of room. Again, looking at 109 for the entry if you set yourself up for that. All right, looking over at BNTX, nothing moving higher there yet. And BXRT is a little bit of a move up there. So again, focusing my effort on this right screen at the 109 level. If it doesn't break down below that, then we're not going to take the trade. It's got to set up. It's already at that 10% off, so and again, it would be better if it moved higher here, but we shall see. I kind of like these dojis. That means it's trying to go higher and it can't. Tempted to take it here because this looks like it's getting ready to roll over. I'm going to go to another screen real quick, look at the overall market. Obviously, we have the SPY there to the left. Kind of see how the market's trending here. So kind of flat at the open. All right, well, we'll keep an eye on that. All right, what's going on with BXRT? It is moving higher. Right around that $5 line where I like. That's not, it looks big, but that's only like a 20-cent move higher there. All right, BNTX again at that 5%. Not really, yeah, setting up a little bit for the long. Liking this down at the bottom, so let's see how much we'd have to give ourselves 50 cents if we took BNTX. Again, we're looking long here, just thinking out loud. All right, BNTX long, we need 63.10 and we need a 60-cent stop, so which is going to cover us all the way down to 62.5. So 63.10 long is what we're looking at for BNTX. Just making a little note over here from myself. And we'd have to cover it all the way down to 62.50. All right, are we getting action here on the Tiffany falling? Oh, there we go. We're starting to get it. All right, I'm going to go 109.10 and get in this. So if it breaks down here, we're going to take this and it's going to be just a dollar stop. $1 is going to be fine. There it is. We're in the name. We are short. I'll draw the arrow there. We got a $1 stop. Now that jumped down pretty good, so you may not have gotten a perfect entry. So just check that when you set your stop. You're going to have to adjust it by, maybe 5 to 10 cents or so. So we are in Tiffany short. I like that trade. Market's starting to roll over. $1 is the stop, so we're thinking all the way down to 107 is what we're looking for. I'll zoom out here a little bit. You see it went all the way down to 100 pre-market. So we're looking at 108.10 as the first level. Again, these are not going to be perfect drawings. And then 107 down as the next level. I'm sorry, 106 would be our 3-hour trade. So very doable there as far as the chart for Tiffany going short. I was looking away. I missed our entry long here in BNTX. Let's hold off on that unless you're already in it. If you're in it, good for you. Just keep it. Again, set your stop down here at 62.50. So again, if you're in it, that's fine. If not, don't take it here. You wait for it to come back in. I'm going to surf around a little bit and see what's going on in work. We use the middle pane. Again, we're in this right-hand pane short. We're in this trade. I'm not in this trade, so over here, but if you saw it and took it, then good for you. All right. Here is work. This would be a short. It was down up to 20% earlier. So we'll see. Let's look at some other names out there. Zoom was a name long. We're going to look at long names in this middle pane here. So Zoom, not really much movement there. It's hanging around that 5% point. NEO was up 5% pre-market. Ooh, that one moved up. So NEO getting lots of love, a lot of money flowing in the EV names, especially since money's flowing out of Tesla in the past couple days. People don't have the confidence they did. So that's a nice move, about 40 cents up there. So nice setup had we been looking at it, but we weren't. Can't look at everything. Roar Cannabis is another name, was up 5% earlier. It's not anymore. It's almost $1 off and actually in the red for the day. All right, Tiffany's continuing its sell-off, so that's working for us. Let's see, American Eagle was another name that was up off of earnings pre-market, AEO, and then into the red and now back into the green. So that's not going to work. Invax was a name we had in here initially. We'll check back on that. It did not look like it was setting up for long, but it did actually. So pretty similar to the BioNTech. So looking at a different trade, if we entered this long now, you get the same entry point, but you'd be able to lower the, tighten up the stop. I'm not going to take it. I do like this, but not taking it. All right, let's look around at Invax. We took it AIM. That was when it's down to $2 level. So up a couple percent. Workhorse. See what's going on in Workhorse. That's a nice move up. So, ooh, that would have been a pretty entry too. Down here, you see these dojis hanging down, drops all the way down. So the entry is right around 22.30. Big stop though, 60 cents. So dollar move higher from there. Obviously, we're waiting on the contract for the Workhorse folks, the contract announcement. It's got to be leaking some, which means somebody's going to get in trouble for it. But if you look at back this out to a 10-day, I mean, this stock was down, this is what, 6 days ago? Down here at 16, now it's up at 23. I've been in it the whole time, so I mean, I like the move, but yeah, somebody's got to know something. This isn't just anticipation here. So we'll see. All right, 8 minutes into our day, we have one trade. It's actually up into the red now on our trade, so we'll see. We'll keep monitoring that. What other names do we have here going long? We'll take a look at. And then BNTX just really hasn't done anything yet, so we'll give up on that. All right, so just the one trade, stay in that. We're going to switch over to take a look at the market overall. I'm on another screen to see how we're doing. So we are up basically 1% across the board. Nasdaq's up 1.5%. It kind of looks like it's holding there. We'll see. Obviously, we've had some days that tried to go higher for about an hour and then just turn around and sell off. So we'll keep an eye on that. All right, as far as looking at all the way to the left there, as far as what's moving up, have NEO, we talked about, Workhorse, yep, Tesla, those are all EV names. Clickstream's up a little bit. Shopify bouncing up 3%, that's nice. Duke Energy actually up today, so it would be nice for the energy names to get some love, especially like Exxon. I'm out of it for the most part, but I still have some that I have not let go of, and probably should have, but I don't think it has any more downside, but I'm not a buyer here either. LCA is up again. Again, that's the GNOG. That's been up almost every day for a while. DraftKings up almost 2%. So a lot of names in the green. Everything on the board here is up more than 1%. Let's look and see what's not getting love today. All right. Northwest Bio, it's been on fire, so selling off here is not a big deal at all. Luckin down a little bit. Nikola down today. Again, it moved up like 40% yesterday on that, so that's selling off. There's a trading strategy that people use there. Southwest selling off, Delta selling off, Boeing, Starbucks, Disney. Disney has some, they got an upgrade yesterday pretty significantly. But, so I was thinking about, is it time to move back into Disney? And then I get this huge China, all the ties with the Mulan, which is, I haven't seen it yet, but I know it's out. We'll probably see it this weekend. All the ties to China that helped them film it. And it's like, getting some negative press there. So not very many names in the red. So we'll see how today turns out. Let's check back to our trade. Oh, trade looks like it's moving against us. We don't have much left to go. So we'll see if that holds. I like that resistance level. That's the high of the day right there at 110.13. So if it goes above that, then that will be a failed trade and we'll be done with it. All right. So the question of the day, don't see any question, not much talk in the chat other than yes, own Apple products. I like that. That's always sage advice. No questions for us today other than my question of the day, which is, should I reinvest my dividends or not? So here's several things to think about. First of all, if you're living off of them, which is, kind of the point of all this, is to build enough portfolio, build enough size of a portfolio during your lifetime to where now when you get to the phase where you're living off of your portfolio, instead of your dividend checks sitting in your brokerage account, they come into your bank account and then you basically live off of them. Or they supplement Social Security, his and hers in the case of a marriage, or if you have a pension or pensions, it supplements all of that. So if you need that money, you're going to take it. You're going to take it one of two ways. You either add up all the dividends that you're expected to get over the course of a year, divide that by 12, and then just take that monthly as a regular payment. A lot of people like that from a cash flow perspective. And you also include your bonds in there. If your bonds are kicking off interest, which you can't reinvest, all of that dividends and interest over the course of a year, divide by 12, there's your monthly payment. So that's one way to do it. Or you can just take it as it comes to you, which means as it pays out each month, some months pay more than others, money comes into your bank account and you go from there. So that's if you're taking it out of the account. If you leave it in your brokerage account, a couple things to think about is if you are in a wealth building phase, then I generally say yes, and especially if your portfolio is below like $500,000. It's like, yeah, just reinvest it. Don't outthink it. Just put the money away. The amount you're talking about in dividends with the portfolio below $500,000 is they're not needle movers, if you will. But if you get above that $500,000 up to towards $1 million, now if you have a sizable holding and it's paying out a huge dividend, then you may not want to just automatically reinvest that blindly, because what happens is you have oversized positions that pay big dividends, and that just continues to make that position oversized, which then you start to worry about rebalance. You're going to force yourself into some form of rebalancing, which you don't want to do. So why do that? Take it the other way, and if your portfolio is over 500,000, I would say no, don't reinvest the dividends. What you want to do there is now let that money go to cash, and that cash will actually build up into a significant amount faster. So now you can redeploy it surgically into your portfolio. So instead of below that $500,000, you buy like 14 to 20 to 25 good names. If it pays a dividend, you just reinvest it right back into that name. Scottrade used to have the flexible, where you could collect all the dividends and point them. That's gone. But you can reinvest right into that name and call it good. But another reason, so if it gets above 500,000, then I would say don't reinvest the dividends unless you're trying to build more of something. But no, if you're passive, then I would say, yeah, do it. But if you're active, then you don't need to bother. So another reason not to reinvest the dividends, and this generally only applies when you get to above 500,000 too, is if you're doing covered calls. If you're doing covered calls, you want even lots of 100. So if you reinvest the dividend, you may have 101.5 shares of something. And if that happens to you, and if you've seen me go into a portfolio and sell 1.25 shares, that's what I'm doing. is I'm going in there and I'm shaving off that dividend, and then I've stopped reinvesting it. So that's another way to keep it right at that even 100 lot of 100 shares out there. So in the case of if you do get something called away, or say it's like Callaway Golf, I'm perfectly happy for it to get called away. I know it's above the strike price right now, and I don't care. They can have my shares if the stock price is still where it is. So, but what I don't want to have is 1,002 shares of Callaway Golf, have 1,000 shares get called away, and then end up with 2 shares in my portfolio, because now it's just dust in my portfolio. So those are some things to think about. As far as talking about our trade, Tiffany, we got busted out of that, so you need to give up on that. Down an hour for the day, down 2 hours for the week. We will fix that tomorrow. So that's what I've got for should you reinvest your dividends or not. Again, there's some math functions while you're wealth building to do that benefit reinvesting them. Generally above $500,000 or so, I wouldn't bother anymore. Take that money to cash. It's always good to have cash on hand. So then when you want to buy something new, you've got some stuff to roll into it. So that's what I've got for you today. Thank you so much for checking in, and we will check back tomorrow, and I will see you then. Have a good one.